Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on, when it's going on, etc., so that we're not taken by surprise by anything. Looking at the news calendar today is a pretty big one. 8:30, we've got the non-farm payrolls forecasted at a positive 50,000. Previous was negative 140,000. At 8:30, we also have the unemployment rate, which is forecasted at 6.7%, unchanged from previous. There's some medium news announcements thrown in there as well, but realistically, unemployment and non-farm payrolls are going to be the big ones. There are a lot of traders who will specifically trade just that news announcement as their strategy. So everybody's going to be paying attention to those. Aside from that, there's not really a whole lot else. News doesn't start kicking back in until 1300, and that's the U.S. Baker Hughes oil rig count. And then we've got the CFTC speculative net position stuff in the afternoon. So there's not really much else going on. But this morning at 8:30, there's a big one, and that's going to be the non-farm payrolls and the unemployment rates. So with that out of the way, now we can jump into some charts for today. Today is 2/5 of 2021. First up on the list is going to be the NASDAQ, and overall, we've got some pretty good channel movement to the upside. It's been kind of weak, realistically weak in the sense that it's not really breaking through the highs very much. Obviously, this is not a weak market, it's very strong, but one big thing that does stand out is how desperate this market could potentially be just for a pullback, just to allow buyers to come back in on a little bit of a cheaper dip, especially considering that all of the support back here was so heavily bought into. A lot of traders will have been waiting for proof. Well, we have our proof. So the next pullback, buyers will be looking to aggressively jump back in on to ride this trend back up. There's a nice L1. We line that up with a half DP down. That's also at the bottom of the channel. There's a lot of things lining up down there at the 13,440s or so as an area of support to see if the market wants to bounce back up and continue along their merry way up towards the top of the channel. Next up, we've got the S&P with a very nice rally to the upside here as well. The big thing, again, that we're seeing kind of across the board is that these highs really aren't getting up to the top of a channel. If we draw them up as a wedge, it gets a little bit closer, but we're not really seeing that lift off, and that could just be indicative of buyers needing a decent pullback. Every time so far we've had a decent pullback, the ramp back up was very aggressive. So if we can get another pullback, we've got a half DP down. We've got the L1 that's waiting at the bottom of the channel. It's a lot of things acting as support, but more importantly, this is also the previous major congestion zone from a structural standpoint. So there's a lot of stuff here, again, just like the NASDAQ, that will be happily waiting for a pullback for buying pressure to move back up. It's not that buyers aren't done taking this higher. It's just, it's so far up that when you're dealing with these all-time highs like this, nobody really wants to buy at all-time highs because nobody's ever really sure how far it's going to go. There's no structure to work with. So while the market's just kind of chopping up like this, well, realistically, it's still got a bull trend, but it makes more sense to buy on the dips. Over on gold next, we have a big bounce off of the lows. The sellers attempted to get that wedge breakdown, which looked like it was going to stick the landing. I mean, that sell side move flushed through 1800 like it was non-existent. And, well, it was relatively short-lived. They weren't able to make it much further below 1790 before seeing it reverse right back up. It was far enough down to keep the close or the settlement price low, so we are going to potentially be opening up with a relatively large RTH gap to the upside. But the big thing that stands out here is how we're coming back to the area where the wedge comes together, the wedge that was broken out of. We also have the L2 for sellers. We've got a 1.5 DP, which is a little further up. Market's resting on 1 DP. And all of the probability would dictate that the sellers, as soon as this starts getting back up towards these 1820s, everything would say that sellers will try to push back down again. That said, this is a big potential reversal on a V-bottom that could start a move all the way back up towards the highs, and we might see this thing rotate from 1800 to 1900 in a couple days. Then over on crude oil, more continuation to the upside. Yesterday's dip into L1 was a picture-perfect pullback and V-bottomed straight out. With this bullish continuation up, kind of looks like maybe a spike in channel, kind of sort of in the nearer term. Really, we're still in the middle of the wider channel. The market never really made it to the bottom. It's just kind of trying to migrate up to the highs. That might mean that there's a newer channel, something along the lines of this, which adds even more bullish context because buyers will be looking for a relatively strong ramp up. But either way, they're both pointing to the upside, and we're in the middle of both of them. So the fact that it's in the middle, there's not really anything to add to support. We're going to need to see a bit more of a dip or just a rip to get it out of here. The zone of support would be back towards settlement, and that also lines up pretty nicely with another L1 at the base of rising channel support, or channel support a little bit later, depending on how the market wants to get that job done. If it does keep going higher, then, arguably trying to get back up to the channel highs, which still hasn't happened, but that will be the objective. Then over on the euro, we've got more continuation to the downside, although the sellers have missed the bottom of the channel by a little bit. Starting to see some base going on here and pushing the market back up. Right around that settlement price from yesterday, market currently rallying higher. We've got that gigantic 1.2 area, which we can see caused a massive mess the last time it was there. So this 1.2 area lines up with the top of the channel. It's an L1 to the downside. It's a half DP up. I mean, there's a lot of things stacking up on top of that 1.2. Not to mention that it's just a massive psychological level. So this area is going to be very interesting for the sellers. If they're going to hold the market down, we shouldn't get much above 1.2 before cycling back lower. And if it does, then that might be a sign for failure where we get a reversal back up. Then over to the cryptocurrency side of things, with Bitcoin first going into a wedge and not really going up or down, just kind of pausing a little bit here. Settlement price hovering around there, not really doing much. Buyers are trying to get above the top of the wedge, but we haven't even really made it back towards the rising support yet, which is where all of the major support comes in. We've got horizontal half DP support at 36,000. We've got the rising channel support. We've got an L2. Everything is looking much, much better in terms of buying a dip. Buying way up here doesn't mean that it's not possible, but it does have a lot more challenges to have to work through before it's able to become a successful trade, which means that it's going to be low probability and maybe not the best spot for a setup. And then finally over on Ethereum with a very nice looking wedge, market going sideways. It's at the top of the channel. This is where a lot of buyers will be taking profit. We're pushing into that 1600 area finally. 1600 is a big zone of profit taking that we've been watching for a long time now. We finally made it up into that area, actually quite a bit further, digging into almost the 1700s, depending on your brokerage, or your exchange rather. But now pulling back a little bit off of that high, tried to ramp back up again, and then pulled back off again, and then tried ramping up again. You can see we're in a little bit of a range here. There's some decision making going on. Buyers are obviously buying low, and sellers so far really aren't showing that they're selling high. I guess that's a good thing for the buyers, but that could also mean that sellers are just piecing out of some profit targets or just not exiting at all. We know how this HODL crowd works when it comes to cryptocurrency. And, well, it's at the top of the channel. It's at the top of the wedge. It's at a half DP up. It's got a lot of problems here for the buyers to continue this back to the upside, at least in terms of having to work through all of this stuff. If the market does start going higher, then all-time highs again, there's nothing else holding it down. And that's when we start looking at those $2,000 to $3,000 objectives. If it starts breaking down, though, then the channel highs might be holding, and we could end up seeing this get a little bit of a flush back to the next major area of support. Alrighty, well, that's going to do it for me today. Like I always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day today, and we will see you all next week. Thanks.